I wanted to ask point blank, why should users trust an anonymous builder?
Yeah, the answer is they shouldn't trust me. But we have no access over the funds in the DAI vault. There is a 2-week time lock, which gives you more than enough time to withdraw in any case. Basically, we try to minimize trust everywhere.
Hey everyone, welcome to the Edge podcast. I'm DeFi Dad from Fourth Revolution Capital. I'm joined here by my co-host Nomadic, my colleague at 4RC. We're really excited today to speak with one of the most reputable anonymous builders in the DeFi space, Seb, who is the founder of Gains Network. And so we're going to talk today all about Gains Network and their flagship product, gTrade. Nomadic, I think you're the person who originally put this on my radar. And I mean, since then I've been using it as a user, but curious like what you can remember about first discovering gTrade and Gains Network.
Yeah, totally. I've just kind of seen like explosive growth, especially since coming to Arbitrum. But I think what we can all realize is that perps is like a clear product market fit use case for crypto. It's to be honest, it's like one of the few. I hope there's a lot more coming. And I think like L2s and the emergence of L2s has really helped accelerate that and kind of shine a light and just let them kind of compete with centralized exchanges. And I actually just started using Gains because I couldn't find certain kind of pair trades anywhere else. So I just started using it. I'll say necessity, but I was just degenning really. But really like, I didn't even really know what was going on under the hood with everything else and all like the alignment of different incentives that we'll get into further with Seb here. But yeah, just really looking forward to diving more into that with Seb.
Whether you're a trader, farmer, analyst, or newbie, you can trade smart with KYBERSWAP, the OG decentralized exchange and aggregator on 13 chains. Swap at the best rates, farm with real yields, set limit orders, use their proprietary trading and AI tools with the best UX in DeFi, securely and permissionlessly. Get better rates, better opportunities, better alpha, and a better trading experience. Trade smart now at KYBERSWAP.com. Let's go ahead and give some background to Seb before we introduce him. So Seb, as I shared earlier, is the anonymous founder of Gains Network, the protocol and the builder then behind their flagship product, gTrade. We truthfully know nothing about Seb other than his track record building this protocol and product. But today we're hoping that we can help you to uncover more about the mindset and the strategy behind Seb and his core team. Since 2021, Gains Network has developed this flagship product known as gTrade on both Polygon and now Arbitrum. In the website, the long-term vision states that their number one goal is for gTrade to become the most adopted decentralized leveraged trading platform. In its current form, gTrade is designed to allow for low trading fees and a wide range of leverages and pairs, including up to 150x leverage on crypto trading pairs, 1000x on Forex pairs, 50x on stock pairs, and 35x on indices. gTrade to date has powered around 31 billion in trade volume. Over 12,000 traders have used it in its lifetime. The platform gTrade has paid out over 22.3 million in trading fees to GNS holders and liquidity providers. And in just the last 24 hours, they did a little over 302 million in trade volume, which is actually not their all-time record day for trading volume across Arbitrum and Polygon combined. With that all in mind, we're excited to talk today about the many design choices that have been made in building gTrade, why traders might prefer gTrade over other platforms, the inherent risks to using gTrade, and how Seb and the Gains community plan to build what would be the world's greatest trading platform in crypto and beyond. So let's get right into it. Seb, welcome to the Edge. How are you doing?
Hey guys. Yeah, I'm doing great. And you?
Seb, you're at this point, it's like, wow, that was a really long intro. These guys are giving a really long intro. When do I get to speak?
Yeah.
Yeah, no, I really wanted to ask you what you would be willing to share on a personal basis, as a human being, behind the code, but also would welcome you maybe sharing a bit more just about why you chose to be anonymous, and then what prompted you, of course, to start building Gains Network and gTrade.
Yeah, so on a personal level, I've really always loved creating stuff, and programming is a really good way of doing that. And yeah, more recently, I also started really liking creating systems that work really well and optimizing everything. I think it's very satisfying. So yeah, that's why I love building stuff so much. And DeFi is a really nice place to build.
Awesome. I guess on that note, Seb, I'd love to get into Gains Network, and just if you could kind of walk us through the Gains suite of products.
Could maybe you start with leverage trading? Like, where does the leverage come from in the system? How does gTrade actually provide leverage trading to DeFi users?
Mm-hmm. So everything is based on the DAI vault. So basically, users don't borrow funds for leverage. The wins just come from the vault, and when they lose, it goes into the vault. So it's the shared liquidity for all pairs on the platform. And the leverage doesn't go through the liquidity, only the PNL, which is why it's so liquidity efficient.
Makes sense. Okay, so just one thing to note there so far, there are folks that are providing DAI as liquidity, and then when traders win, those wins ultimately come from that pool of DAI, and when traders lose, that pool of DAI grows larger for those that are providing the DAI. And then is it right to say then, Seb, that with the leverage, the leverage is like a representation of position sizes, but at the end of the day, gTrade is simply helping to settle like the difference here. It's allowing, someone to take out a larger position, but they're not actually borrowing DAI under the hood, right? We're just representing that as a larger position.
Yeah, exactly. So for example, like if you open a trade like a huge position size or a very small one, if the huge one closes at like plus 10 DAI and the small one closes at plus 10 DAI too, then it really doesn't change anything for the vault. It only pays that 10 DAI. So of course it changes in terms of exposure risk and everything. That's why we have max OI limits. But in terms of liquidity, what really matters is just the PNL in our case, because we don't have any order books. Like we don't generate the price for each pair. And when there's a trade, it's not like it goes into a pool where there could be like slippage and stuff.
Hey, one follow-up to that, for those that are staking DAI in what is called the gDAI vault, are those folks able to withdraw all of their DAI at once? Actually, sorry, I'm kind of setting you up here for basically to explain this. I think I understand how it goes, but what prevents folks from withdrawing all of their DAI and keeping the system solvent?
So we have an epoch system. So under 110% collateralization, you need to wait 3 epochs to withdraw your DAI, and you can withdraw everything at once. And epochs are 3 days, so maximum 9 days to withdraw.
And Seb, could you kind of walk us through the GNS staking side of the equation as well, and how that works?
Yeah, so GNS gets the most share of the revenue, really. So you can just take GNS and receive DAI directly in real time from the trading fees. And it's done to compensate the fact that the collateralization of the vault is partially backed, if we want, by GNS minting. So for example, if so the vault basically aims at being at least 100% collateralized at any point in time. So if it were to be under collateralized, we could, so automatically GNS could be minted and sold OTC at the 1 hour TWAP price, and the DAI received from the bearers of GNS OTC will be used to refill the vault, and that can be done at a rate up to 18% inflation per year. So that's a nice way we have of guaranteeing the collateralization level, even though traders tend to lose long term. In the short term, it's nice to have an additional boost to come back to that 100% collateralization, because in the short term, when the collateralization level is below 100%, gDAI stakers temporarily lose because the gDAI price goes down. Otherwise, people could withdraw more than there is in the vault, and that's something that can happen, of course. So, and when it's over collateralized, then GNS captures some of the negative PNL from traders, because some of it can be used to burn GNS. So people can sell their GNS to the vault and they receive DAI, and the GNS is burned by the vault.
Got it. So to summarize, when we're more over collateralized, we are able to, the system could potentially burn more GNS, and when we're under collateralized, we can potentially mint more GNS, and that can help to ultimately recollateralize the system, which I want to call out, I think is a somewhat familiar mechanism in crypto. It also brings quite a bit of risk, which I think we'll cover here more. And I'm really interested in like how you're thinking of like the next iteration of the protocol, because I want to say I've heard, you know, just that there's a lot of thinking going into shoring up that risk around the over collateralization. Seb, would there be anything to add to that then in terms of how you're thinking about the next version of gTrade and basically addressing what I said about shoring up that risk?
So I actually think the current system is really good. Maybe we can discuss the risk that you mentioned. I can answer anything.
Let's say that gTrade is becoming more and more under collateralized, and you are minting GNS. And I mean, let's go out and like let's think of like just worst case scenarios. There's even been an exploit in the protocol, so there's like some sort of loss of faith in Gains Network, the protocol, and gTrade, the platform. And so you're minting it to recollateralize, but the price on the open market is actually falling. So you're ultimately having to mint more and more of this. Now, I want to note so far, of course, the platform has been very successful in keeping this sort of balance. I wanted to ask you actually about what might be the estimated inflation rate over the last 12 months. But anyways, maybe if you could first address this sort of worst case scenario, how do you think about that in this sort of situation where, again, there's a loss of faith, GNS is falling in price, and you're trying to recollateralize the system?
So first, I need to start by saying that the vault is designed to work even without the GNS token if we couldn't rely on minting to recollateralize it. All the parameters have been set so that the risk is managed and it doesn't really rely on GNS minting long term. So it's just a nice boost for gDAI stakers to know that GNS has their back when it goes under collateralized. But we don't really rely on it. Second, the worst thing that can happen really is just 18% inflation, regardless if the price went down or up. So I don't think that has killed any project yet. So yeah, in my opinion, there is no risk of death spiral due to this limit, which is different than the previous system. We had to pause back in May 2022 after Luna crashed and everything. We had to disable the minting because there wasn't really a limit. It will mint GNS until it's recollateralized. So, of course, now it's much better in two ways because it's capped to 18% per year maximum. And also, everything happens OTC at the 1 hour TWAP price, which means if the price is basically dumping and the TWAP is above the price, you don't really have an incentive to buy GNS from the vault. So minting will only really be interesting or happen because it won't happen automatically. Like users have to trigger the function. So there has to be an incentive, right? And the incentive is compared to buying GNS on an exchange, you have no swap fee, you have no slippage because it's done at the 1 hour TWAP price. And of course, if the price is rising, then the 1 hour TWAP price is a bit below the current price. So you could buy a bit below the current price. But if the price is dumping, there's no really incentive to mint GNS then because the 1 hour TWAP price is above the price.
I think one other thing there to note, if folks get confused, the design of this system, as you mentioned, Seb, it's meant to exist without having to mint and burn GNS. I'm really calling out like worst case scenarios here, which obviously as a user you should think ahead and plan for, and as folks who are participating in the protocol in order to protect ourselves. But to be clear, that gDAI vault is meant to basically exist without having to lean on this. That is sort of like a worst case scenario. Would you say that is that a good way to characterize that, Seb?
Yeah. So GNS brings a nice additional like guarantee to the system. I mean, in practice, I'm pretty sure it will work. But the worst case scenario, of course, we don't want to overly rely on it. So, for example, if for some reason the GNS minting wouldn't be enough to recollateralize the vault, I mean, we just rely on the trader's losses to get back to 100% collateralization, and there are incentives in place so that you're actually incentivized to stake when it's under collateralized. So we don't, for example, have a huge bank run, everyone withdraws, and we have no more DAI in the vault. Actually, when the gDAI price is under 1, for example, if you stake at 50 cents, then if it goes back to 1, you will double your collateral in the vault, as well as earning fees, of course. So there is a nice incentive there to stake, to guarantee that we always have enough DAI to have the trading platform running.
I'm going to share a chart of the P&L of closed positions. And as you know, we're talking about basically the balance of wins and losses for traders and what that means in terms of profits or losses for those that are in the gDAI vault. It's worth looking at this chart on Dune Analytics. The cumulative P&L of closed positions is currently around 7.5 million in favor of those that would be in gDAI. So that's, am I reading that correctly, Seb? 7.5 million in losses for traders on the gTrade platform.
I'm just checking. Yeah, that's correct. Yeah.
Good. Yeah. And we'll share the link to this as well. This is a really great place to get, a real-time view of what's going on the platform, the growth of users, the growth of liquidity, the growth of, daily trade fees, all the sorts of stats that you'd want to monitor in terms of the health of gTrade and Gains Network. Seb, I think we covered nearly all of the most important parts of what allows for leveraged trading then. One thing that you've referenced that I'd love to try to dumb down, the gDAI OTC, can you talk a little bit more about that? That is sometimes a confusing concept for newcomers to Gains Network.
So when the vault is over collateralized, we want to burn GNS so people can sell their GNS to the vault. The vault burns GNS, and it sends them the corresponding DAI, which comes from trading losses. Currently, 5% of all traders' losses go into that pool, where anyone at any point in time can sell their GNS and receive DAI, and the GNS is burnt. And that happens OTC because it doesn't happen in a swap pool or anything. It's just literally the user sends GNS and the vault sends DAI. So no price impact. Same for when it's under collateralized. So there we want to mint GNS and get DAI into the vault. So the user can send DAI to the vault, and the vault will mint GNS to the user. And just like that, the user can buy GNS from the vault.
Awesome. Makes sense. And Seb, kind of like before we get off the GNS token, I think you've already touched on its importance with stabilizing the vault, minting it or burning it. But what other utility should people be aware of for GNS? Like what other functions does it serve within the protocol, or anything else is like maybe somebody who wanted to hold GNS, other maybe incentives to do so?
There is actually a second pretty big use case that is pretty underrated, I think. So right now we pay NFT bots, for example, in GNS. They are the bots that trigger all limit orders, stop losses, take profits and everything on the platform. So we could pay them in DAI, but instead we pay them in GNS that we mint, and instead the DAI goes into the vault, just like traders' losses, which supports even more the collateralization of the vault, because it's an additional edge. Like even if PNL was flat, that way the vault collateralization will still increase from these fees, and of course that creates a small inflation. That was like until a few weeks ago 2-3% per year. But recently we increased the burn percentage, so that now it's slightly deflationary, the GNS token, because we can basically choose, depending on the current PNL situation, if we really need this edge or if we don't need it. For example, right now we have a lot of over collateralization, but we still want it to grow. So we've put the burn to basically offset the inflation. And if we at one point have even more over collateralization, we could set the burn higher, for example. And if we feel that, or like if there is recently a drawdown or something, we can lower back the burn percentage to have that edge again. And I think that that's really powerful. Otherwise, yeah, it will be the governance token of the future DAO.
You mentioned the NFTs as well, and I just found out recently about the NFTs. I was going through some of the documentation just to kind of get more acquainted with Gains Network, and I looked some of them up on OpenSea, and some of those are like trading for a lot of ETH, and they seem quite powerful. Could you just kind of explain like what the NFTs do for people trading on Gains or gTrade?
So they have 3 use cases. The first one is boosting your GNS in the GNS staking pool. So it's like a yield booster. Of course, each tier boosts a different amount. And second one is they reduce the spread on the trading platform when you trade. So if you hold one in your wallet, the spread will actually be a bit lower when you do trades. And the third one, of course, is to run NFT bots. Basically, only people who have NFTs are allowed to trigger limit orders and everything, because, nothing happens on the blockchain if there is no transaction. So, for example, if right now there is a liquidation or a limit order to trigger or anything, we need someone to run bots to trigger them. So if you have an NFT, you can run an NFT bot, and you will be allowed to trigger these orders, and you will get rewards. Of course, you'll get a fee in GNS.
Wow. I did not know about the NFT system. I just learned something while we're on the interview here. So if folks want to learn more about this or read more about it, you got to go into the Gains Network Git book or their docs. It's under GNS NFTs. I just opened up the OpenSea link for the Diamond GNS NFTs. So there's only 100 of these. It shows, Seb, can you remind me, sorry, what does the SSS boost refer to?
Single-sided staking, so it's GNS staking.
Okay, there we go. So you get a 13% boost, which is the highest. So no doubt here among the 5, there's bronze, silver, gold, platinum, diamond. Diamond, there's only 100 versus the lower tier, I guess bronze has 500. The price of the diamond GNS NFT, the floor price is 34.9 ETH right now on OpenSea, which based on today's price of around $1,650 US dollars, that means it's going for about $57,000, 57,000 US dollars. So that is wild. That's cool.
That's wild.
What was the distribution of these? Where did these come from? I don't know any of the story behind this. Like, were these early users when it was originally distributed, or were they offered up at like as a sale to raise funds for building gTrade?
So actually it was distributed just like the original token. So before we were called the gains.farm, so it was a gfarm token before we transitioned, and all of the tokens and NFTs were distributed to liquidity providers. So we had the gfarm ETH liquidity pool, where you will stake LP tokens and you will receive basically the minting of the gfarm tokens. So that's how we distributed the supply over like a few months. And you could be able to mint NFTs using NFT points that we were distributing to the biggest LP providers as well. So if you were in the top, I think 1% or something like that. I don't remember exactly now, it's been like 2 years. But if you provided, I think, more than 10% of the TVL, you will receive NFT points that will let you mint these NFTs. And of course, the diamonds one were requiring a lot more NFT points. So it could take like a few weeks to be able to mint one.
I want to ask you one more question just about GNS token before we kind of move on. Just because I've just realized you mentioned earlier that GNS has become deflationary as a token, but I honestly didn't quite realize how deflationary, and I was just looking into it a little bit. So the original token supply was 38,500,000. The current supply right now is 30,446,000. So that there's actually been about 20% of the supply has been burned. Like, do you see that kind of type of deflationary pattern persisting? I guess obviously it's totally tied to the DAI vault, as we talked about earlier, and whether you're in a state of minting or burning. But is that pattern likely to kind of keep occurring?
I think it will be very hard to deflate at such a high rate. It happened kind of because the gfarm price was really low because the project was really early, but we were seeing a lot of volume already on the platform. So like the price was extremely cheap, so it could burn a lot of gfarm for the same amount of DAI. But now I don't think it's realistic. But yeah, I mean, deflating is already really nice. I don't think there are many DeFi tokens that have both deflation and DAI rewards. But yeah, I think like maybe a few % deflation or... so right now at the current settings, I think it's deflating at something like 0.1 or 0.2% per year, which is quite nice already. And yeah, maybe we can go above 1%. I'm not sure, but 20%, I don't think so.
Yeah, a few other stats here I just want to call attention to, and this is all in this public Dune dashboard that we'll share in the show description. 70% of all circulating GNS is currently staked, which is, I think, a really impressive number. I think as Nomadic noted, there's just been a lot of GNS that has been burned. I'm checking here. What is the estimated APY for staking GNS? This assumes that you don't have one of the GNS NFTs. I want to say it was around like 7 to 10% recently when I checked. But I guess, okay, another important number then to note is, and we covered this earlier, the gDAI vault, and I'm speaking to the one on Arbitrum, that's currently earning about 18.9% APY, which tends to spike on days when we see, of course, more trading volume. So when there's a bloody day in the market or there's just like a severe correction, this to me is a part of the magic of DeFi. In 2018, we used to look at those bloody days and just marvel at how much money Binance, Coinbase, all the exchanges were likely printing. I think at BitMEX too at the time had to be one that we would have been really impressed by. But now, because of the fact that there's a joint ownership in a platform like gTrade and others similar to gTrade, like a GMX, these decentralized leverage trading platforms really provide some, insane yield. With over 170 million TVL cross-chain, the multi-chain liquid staking protocol STADER Labs is just about to launch the ETH liquid staking token ETHX. ETHX will give you the best of decentralized staking and DeFi yields. What's more is that anyone can permissionlessly run an ETHX node with just a 4 ETH bond. To get more alpha on the ETHX launch, go to staderlabs.com/Ethereum. With over 60,000 subscribers and 450 integrations, Push Protocol, the leader in Web3 communications, just launched Push Group Chat. While Push Chat already enables secure and private wallet-to-wallet messaging between any wallet addresses, the new Push Group Chat allows anyone to permissionlessly create groups, share files, and collaborate with communities natively on Web3. Try it now at app.push.org.
I just wanted to touch on maybe like switching gears from the token, like DeFi Dad and I could talk about the token and all its use cases all day. So, but as far as like kind of like growing a trading platform, how important is the referral system? And can you kind of speak to like its success or any lessons learned kind of so far?
So before we had a system where everyone could create a referral link. And the thing is, it didn't work really well because mostly everyone was just referring themselves to pay less fees. It's impossible to know if like two wallets belong to the same person. So you had all this kind of stuff, or like the referral wouldn't really bring any new users. It was more of a cost. So we decided to make a new one where the referrals, the ambassadors that have referral links are now whitelisted by us, so that we cannot have just everyone creating a link and referring themselves on another wallet, because it was quite a big cost. I mean, I think it was like above 100K a month going to referrals that were just useless, like they wouldn't bring any new users. So that's why we made this new system. But yeah, now it's not really a huge success, I would say. There is not really a ton of new traders coming from referrals, I think. Mainly because we don't really offer an incentive to use the referral link. So like you don't get less fees if you use the referral link, because otherwise like everyone will use a referral link and we will basically make less revenue, and it will cost us more than the potential additional revenue from that. So yeah, I'm not sure what to conclude about the new referral system, but We did our best with it, and I'm open to rethink it again. But yeah, right now it's not seeing much traction, to be honest.
Yeah, makes sense. It's a tough one. Like you said, you get people basically like Sybil attacking the referral link and just using 10 wallets, and you're just not getting any new capital, really. You're just getting potentially the same capital spread out through multiple trader wallets of the same person. Yeah, that's a tricky one. But yeah, I'll pass it over to DeFi Dad. I think he's got a question for you.
Yeah, Seb, given all that we've covered, how do you think about comparing gTrade at a high level versus other decentralized leverage trading or decentralized perps platforms like GMX or DYDX? This would be a good explainer for folks who are newer, I think, to gTrade and trying to figure out, why would I use gTrade versus some other alternative out there?
So I can first start by comparing the architecture if you want. So there are two big differences. So the first one is, I would say, two main points. So first one is we don't use order books to generate our prices, which is huge in terms of liquidity efficiency, because otherwise we will need liquidity on literally all the pairs we provide. So like, I don't know how much there is generally in an order book, maybe like a few million in liquidity, something like that, or on big pairs maybe a few dozen millions. But in our case, we don't need any of that. We just get the prices from the centralized exchanges using a decentralized Chainlink Oracle network. So that means we don't have that cost of incentivizing the liquidity on each pair to just generate the price. We just get it from the biggest exchanges. The spot exchanges, by the way, we don't rely on any other leverage exchange. And yes, some people say, but then you don't have price discovery, you depend on other exchanges. But I mean, spot exchanges are not going away, right? And I think basically every perp depends on the spot market as well for their funding rates and to stay close to the spot price. So I really don't see it as having any negatives, but I think some other protocols are a bit jealous. No, I'm just kidding. It's huge because really we will need like maybe 500 million in our order books to have all these pairs and like decent slippage. There we can just take the price and get it on chain, and we can list any pair in this way. So I think that's really strong, and that's without, like, when we list a new pair, we don't need, it's not like we start with an empty order book. Like, there is basically no price impact on your trades because you just trade on the spot price. So it's a bit of a different story on altcoins though, because these have very thin liquidity generally, so we had to create a price impact formula to prevent people from manipulating the price after opening a position. But on basically every pair, apart from altcoins, so Bitcoin, Ether, and all the other pairs we have basically 5 asset classes right now: crypto, forex, US stocks, US indices, and commodities. On everything but altcoins, there is no price impact. There is just a small spread. So that's the first big difference. So that means the vault basically powers trades on all the pairs. So it gets fees from all the 90 pairs we have, which, as you can see, it's really liquidity efficient then, because we can concentrate all that liquidity in a single pool, and it makes the APY much higher, and it doesn't fragment the liquidity between all pairs. So, GMX is another synthetic platform, but they actually need liquidity in each token that's in GLP and that they offer for trading. So they also get their prices from Chainlink Oracle, but all the assets listed for the platform to work, they need to be in GLP. So for example, if they list any asset really, they will need it first to be tokenized. There will need to be a token representation of the asset, and it will need to be added to GLP in its current form. And that's a really big difference with us, because, for example, we can list anything, like, I don't know, Doge, for example, without requiring our LPs to hold it, because people might not be super interested to hold Doge, for example, when providing liquidity. So they can just provide DAI and allow trading on any pair, really, without it having to be tokenized or in the liquidity, which is really another big step of liquidity efficiency.
Yes, Seb, I think that second point is massive, just because, like, it gives gTrade the flexibility, like you said, to just have way more trading pairs and just way more tokens that can be traded. Whereas, as you mentioned, GLP, like, I'm a big GMX fan as well, but GLP needs to have that liquidity for each asset that they trade on their platform, which is good, but it's also a bit of a drawback and almost like a liability to the amount of kind of different tokens they can offer. Whereas with the gTrade platform, that DAI vault kind of does it for all assets, which is awesome. And until you just mentioned it, it hadn't really stood out to me why or how you're able to do this on gTrade. But yeah, no, that's a huge point. One thing I wanted to bring up is just like, so gTrade or Gains Network was already having quite a bit of success on Polygon, and then the platform came to Arbitrum, and that's where it really caught my attention. I knew about gTrade before when it was on Polygon, but Arbitrum's kind of like my home chain. So when it came to Arbitrum, I kind of saw the explosion of volume, and just looking at that same Dune dashboard that we referred to earlier, it looks like Arbitrum is making up about 70% of like the total volume now for gTrade. So can you just like speak a little bit to just that move to jump to Arbitrum, and is there like some sort of Arbitrum effect, or what is it like? What is that special sauce that is working on Arbitrum? Is it just the makeup of people on that chain, or what do you think? What do you think is behind that?
Yeah, for a while, I mean, we had a really good product already before coming to Arbitrum and before the new vault, but we were a bit surprised to have like really way less volume than GMX, for example. And we couldn't find why, because we had way more pairs, more leverage available, smaller fees and everything. And people were constantly asking, like, when is it going to Arbitrum? Will you deploy to Arbitrum? So yeah, I guess there's some kind of Arbitrum effect or something, because since we deployed there, the volume has, I think, a bit more than tripled, as we anticipated. So we really prioritize that above everything else, because at the end of the day, the numbers matter. So you can build the best product, but if there is no adoption, I mean, yeah, it's a bit sad. So yeah, we prioritize that because we kind of anticipated that it was the best move in the short term to bring more volume and TVL and everything, and it played out quite nicely. Yeah. But as for why, I cannot really say. I mean, yeah, it's technically Arbitrum is, I can understand it's a bit faster than Polygon. So for example, when you do a trade, it takes like a few seconds less. Yeah. And there is another quite big thing is that on Arbitrum, there is no like reorgs. It's instant finality due to the sequencer being centralized currently. So that provides a really solid UX. So if we took including confirmations, because we need to wait 2 block confirmations on Polygon at least, so that reorgs will not affect trades every time, it will take like, I think, 15 seconds to do a trade. And now on Arbitrum, it's more like 2-3 seconds. So yeah, I guess that also really helps for short-term trading, because otherwise you need to wait 15 seconds and the price moves and everything, and it can be stressful. And actually another huge thing I want to point out that we released at the same time as Arbitrum is one-click trading, and nobody else has it currently. So we created a system that allows people to bypass the MetaMask confirmation. So basically you can just click on like open trade, and it will send the transaction directly without opening MetaMask and ask you to confirm, which actually I've measured it, and it can take like 6-7 seconds for the pop-up to load. Then you need to scroll down, click confirm. It's quite annoying, to be honest. Like, most centralized platforms have an option not to have confirmations. And I think it's a big part of the UX. So basically you create a new wallet that has control over the over your main wallet's funds. So your DAI stays in your main wallet, but you create a new wallet that you delegate. So from your main wallet, you delegate it to the new wallet, and the new wallet can access the main wallet funds. And you just need to send Matic to that new delegate wallet, and then you can open trades from it. And it's basically generated locally from the front end. So that's how we can bypass MetaMask, because it's a new private key.
Yeah, no, I really want to encourage folks to go to gains.trade, because the UX, it's the closest thing to a centralized exchange. And I mean that, of course, as a compliment. This was sort of the dream many years ago that DeFi could rival what it was like to trade on something like Binance or Bybit or BitMEX, which was never actually a good trading experience on BitMEX. But yeah, now you get all of the benefits of DeFi with, self-custody and being in control of your assets. One follow-up to just the trajectory of growth, or the journey that you all have been on. Well, you've been growing against this like crazy backdrop of 2022. Like this platform has grown so much despite the fact that 2022 was a terrible year for a lot of people in crypto. FTX collapsed in November 2022. I'm curious, did you see any uptick of users during that time or after the collapse of FTX?
Actually, we did, yeah. In daily traders, if you go on June, I think there is a nice spike right in November.
Oh yeah, I can verify that. Yeah, it is. Yeah, you did have a really nice uptick on November 9th, especially.
And by the way, I want to mention that the platform handled FTT going to zero really well, because we had it listed, and with all the new risk management measures we had in place, it created really no significant effect on the DAI vault. In fact, our overall collateralization even grew from that. So yeah, was a big difference compared to Luna before we had all the new measures in place. It was a really nice stress test.
Seb, just kind of like a few more questions here before we wrap. Something that I read in the docs, and I'm just showing off that I read the docs really by saying that. No, but it kind of caught my eye, because some of like the future things that you have on the roadmap that you want to build sound like really interesting and kind of like grandiose. And I'd love to hear you kind of speak to them. So one of the things was for new products, a casino and a metaverse. I mean, can you talk any more about that vision to kind of build your own casino and metaverse? I think that sounds pretty interesting.
Yeah, so one of the great things about our DAI vault is that we can really create any use case that resembles trading on top of it. So for example, a casino has a defined edge, so long term that is going to generate losses from people. So that at least it won't be a risk to the vault if you offer this. In that sense, it's quite similar, so we will be able to offer it just with our existing vault liquidity. And that will even diversify the risk from trading, because then there's another product that runs on top of it as well.
Yeah, I mean, I think those are pretty solid bets of not only traders losing, but in the long run, but people at the casino losing. So I think that will pad the DAI vault even further.
No, I was about to answer for the Metaverse because we say that a long time ago, and I've actually not thought about that for a good time. But yeah, not answer about this, or like I would just say that it's for like in 2 years when trading is finished. We have lots of use cases on the DAI vault, and I think Metaverse is the second biggest thing that interests me, because if lots of stuff moves there, I mean, I think there is a huge potential in the Metaverse once it's really well developed for like everything to happen on the Metaverse, basically. So like the new internet. So it's one of the things that I find really interesting and that I would like to explore after all of this.
I wanted to ask point blank, why should users trust an anonymous builder? Like, what protects them from a rug pull with any project? But I'd like you to, of course, speak more specifically to what protects them from a rug pull with gTrade.
Yeah, the answer is they shouldn't trust me. So, for example, we have no access over the funds in the DAI vault. So some people know the contracts are upgradable, but there is a 2-week time lock, which gives you more than enough time to withdraw in any case, if there was a malicious update pushed. And for the GNS token minting, for example, adding a new minting rule is delayed by more than 24 hours. So you will have time to sell before if you saw that the malicious contract will be given a minting rule. So yeah, basically we try to minimize trust everywhere.
I think that's a great answer. And I also think there's almost like a lindiness to anonymous builders. Like, it's almost like there's a certain amount of time that passes where people just are like, okay, like they've built up a level of trust. Funniest thing, like the crypto that I trust the most is Bitcoin, and probably one of the most famous anonymous, group of people, one person, who knows. But yeah, no, appreciate that answer, Seb. I guess like last thing I'd like to ask too is just kind of like more specific to gTrade. Is there any like features or upgrades that you can tell us about that are coming?
In fact, there are too many. But yeah, the one we are working on right now that I'm very excited about is the look back update, which will allow us to guarantee every order on the platform. So right now, our stop losses are guaranteed on cryptos only because there are no gaps on cryptos. But for example, on Forex, if there was a huge blockchain congestion or something, it's possible your stop loss will be triggered a bit below its price due to NFT bots being unable to basically send a transaction to trigger it. Which, by the way, it works like that on every decentralized exchange currently. So the big difference it will bring is that even if an order is triggered late, for example 10 seconds late, our oracles will have the ability to look back in the past prices, for example the past 2 minutes, and they will be able to see that it should have been triggered 10 seconds ago, and then it can just be triggered now, and it can be triggered at the exact price set by the user. That's a big thing, because we don't have order books. So it's not like, also on a centralized exchange, I mean, your stop loss can have massive slippage because it doesn't, it's not like a limit order where you say, I want this price or better. Stop loss becomes a market order when it's crossed. So you could be executed 50% below your stop loss just because there is not enough liquidity, by the way. In our case, we have an order book, so we can just basically decide that the order is triggered at the price set by the user. And that combined with lookbacks is very powerful, I think, because we will be able to guarantee all take profits are hit, even though there was only a wick there for like 10 milliseconds. We will be able to guarantee that it's triggered. Same for limit orders, stop orders, and everything. And also, it solves them, but liquidations quite important to guarantee them, because if there is a misliquidation, then it's quite bad for the protocol, because then the price can rebound and it could even end up in a profit.
Seb, I think this is probably a good place for us to wrap. But before we do, I want to encourage folks to learn more about Gains Network by going to gainsnetwork.io. We'll share all of these links too in the show description and show notes. Want to encourage folks to go check out gains.trade to see the actual trading platform that we've been talking all about. What else, though? What else would you recommend to those who want to get involved in Gains Network and gTrade in terms of the community?
Yeah, so we are very active on Telegram and on Discord. That's the two places. And also on Twitter, actually. We also have a Medium blog where we post monthly recaps and other nice articles. So that's interesting if you want to see recaps of everything happening.
Seb, anything else you want to share before we go?
Yeah, I wanted to say thank you already. And yeah, it was a pleasure to be on your podcast. And yeah, I'm really happy that also the numbers, so like we could build a really good product and everything, but if numbers are low, it's not great, but no, the numbers are really picking up. So, I mean, it's becoming real now.
I remember when you were under 20 million, I'm pretty sure I wrote a tutorial in a newsletter when the trading volume was under 20 million, because it was a number I remember looking at and thinking, wow, like that's impressive, but also still very small compared to whatever GMX was doing at the time.
Mm-hmm. Yeah, exactly. We had like 20 million and they had like 300, basically.
Yes. And then a few months later, I believe gTrade had actually flipped GMX on a number of days. And to be fair too, I don't think it's a matter of whether or not gTrade or GMX is beating one another. The pie is enormous. Like, I'm excited to see you all doing, hundreds of billions in terms of trade volume on any given day. And given the roadmap I think you shared, I think we're going to get there a lot sooner than people expect.
And the pie itself is really small right now. Like DEX leverage volume is, I think, 2-3% of the whole volume for perps.
No, absolutely. Yeah, the numbers are definitely leaning in favor of you guys. And then also want to remind folks, if you enjoy the Edge podcast, please subscribe by going to our link tree. It's the link tree, typical link, edge_pod. You can also go to anchor.fm/edgepod. And then be sure to follow us on Twitter at edge_pod. And you can also go to defidad.com. I post all the links there to the show on YouTube, as well as our podcast links. But other than that, Seb, thanks so much for your time. Nomadic, thanks for digging in with me. This is, like I said, so much fun. And we'll see you all next time.